Good morning and welcome to Trading with Larry. Larry Benedict, joined by Eric Shamilov on a week opening morning. Yesterday, a lot to talk about. Today is trend day on our podcast. We're going to try to find some trends. Not a lot out there. I mean, I have some in macro land, but we'll get to that in a minute. But I want to really focus on yesterday's trade, which was virtually the dumbest trade I've ever seen. It was good because it was back and forth and back and forth and back and forth and back and forth. And when we have that kind of day, the computers are blowing up. So computers blew up. What was interesting is they took the Nasdaq was weaker than SPOO all day, and then at the end of the day, out of nowhere, they blasted up the Nasdaq, and they literally took the SPOO, but not like the Nasdaq. And this morning, Nasdaq is down 1%, SPOO's down 40 basis points. 40 basis points for S&P. You might as well call the Air National Guard in to save the market. 40 basis points? Can you imagine? I mean, come on. It's like the tale of two markets. The S&P, people are buying S&P like they think they're buying a utility stock back in the 80s, like when I was trading, AT&T or 9X before they broke up all these phone companies, stocks that didn't move. That's the S&P to these clowns. The S&P to these clowns is literally the most stable
A
thing
safe
ever.
haven? It's a safe haven?
It's a safe haven, and the Nasdaq is like on crack cocaine every day. Okay, moving. MU is down 50. Okay, it's lower than the low of the entire move right now from when that lying analyst put some crazy price target on it. Okay, we're lower than that. It's down like 45 or 50 points. In 3 ticks, it could be green, dude, or down 100. There is what I found yesterday in trading some of these equities is there's zero liquidity in the entire marketplace. I don't know if you see that or what you're seeing. There is no liquidity. They're moving the Nasdaq 150 points on air, literal air. The Q cash is trading at 711, then it's trading at 715, then it's trading at 712, it's trading at 718, and the Q moves over 10 figures a day, which is 1.5%. And that is so outside the box of what the market will and should move on the year. If you're having 1.5%, 2% days, and there's 300 days, that's like a 600% move. So something's broken here. It's hard to really figure out
Oh
what it
yeah, I'm
is.
glad. Well, I'm glad you said something's broken because today's trend day. So one of the big trends, one of the big trades that I think everybody has been, a lot of people have been a part of that seems broken is this hyperscalers versus memory trade, and that's been a big trend. The fundamental basis is relatively simple to understand. Hyperscalers are paying the memory stocks, the memory companies. So there's a transfer of free cash flow from one to the other. But now you're seeing the Mag 7s come back, people on the chat are talking up Apple. Microsoft is starting to find its footing ahead of its earnings. So is that a trend that you see is broken? Because that's the word you chose to use, broken.
I don't see anything broken. I think they still come back to the same thing. So if the market's weak today, they're going to buy Apple, which may, what's weird is I was overseas. Apple had to raise prices and they basically had their big day and they didn't even get into AI. The stock traded from 315 down to 270 on the price increase. Not everyone because there's no one really here, but whoever was panicking on that. Okay, so they were panicking on the fact that they had to raise prices, and then the stock blasted up to a brand new high and went up 50. Okay, and as that was happening, Micron went down, Nvidia, I mean, just the regular players. And, I want to spend a minute talking about Micron, which, they're going to, it's down 50. They want to buy. They want to buy at every
Let me
level.
get this straight. You don't think that trend is over. You think that memory stocks will resume their trend line,
I
at
think
least versus the Mag 7s.
I think that things should not be like that. Okay. That's what I would say. I've said it every day on the podcast. I would say that, when the Nasdaq is down, the Dow should not go up. Okay. But we're not trading anything real. Dude, do you understand the word real? We're not trading anything real.
I guess
Okay.
that
This
brings
is
me
not,
to the next
you
trend.
are, we are, listen, when I was trading at a high level, when I ran my fund, okay, I was not reactive. I was an initiator. Now I'm just reacting to whatever's happening. I'm trying to just, like I always say, be a hockey goalie and keep the puck out of the net. That's all I'm trying to do. Okay? There's nothing else you can do. Dude, the S&P should be down 60 handles to 80 handles right now, minimally. Okay? After yesterday's action, after what happened overseas, a market that I look at a lot, and I used to trade a lot, that I think is really critical to our market is the Japanese market. Okay? And the Japanese market, which you say isn't really, chip oriented or, whatever, closed at the low of like this move last night. And it was down a couple of thousand points. Okay. No one's talking about it. All people are looking at are the Korean ants, like the one lot guys that add up to be a swarm of bees. That's all, the degenerate gambling Korean market. Okay. But really, the real true market in Asia is the Nikkei. And Nikkei was bid, 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 and now is no longer bid. Okay. And I'm looking at SPOOs down 27, and I'm fine about it. It's trading, and you got to just be, like I said, reactive. But it should be down 50 minimum, maybe 75. Okay. Especially after yesterday's action, where they look like, come on, the NASDAQ looked like deathbed yesterday. The NASDAQ was on its deathbed, and then they just brought it back. And then the funniest thing is, MOC used to mean something. It doesn't really anymore because you can change the imbalances and it's like a whole rigged game. But like every night, the imbalance is 2 billion to buy, 3 billion to buy. These guys are getting wasted. Okay. They're buying the close and we're opening down almost every day. So there's a lot of divergence, the crazy thing is Trump tonight, I don't even know if it's airtime on national TV, but he's coming out with the biggest announcement talking about the election of 6 years ago. Like this guy he's the president, and all he's talking about is he should have won the other election. Well, if he won the other election, guess what? He wouldn't be president right now, right? He'd be
Is
out. So I don't know what's going on.
that the
Let's
topic
talk.
is that the topic of the speech tonight?
Yes, the rigged election. Why does anyone
I
want
want
to
to
hear
go back
about
to
that?
what you were saying about South Korea, though. I think that's a really important one, and so they've been closing down a lot of brokerage accounts over there. Overnight they also came out with a halt on leveraged ETF issuance, which is causing all sorts of chaos and volatility. But I think to some extent, I know you disagree, but one of the reasons I think this trend of hyperscalers versus memory stocks is probably over is I think now there's no bid coming from South Korea. They're not jamming up the market overnight. And they would set the trend overnight.
Eric, can I
Buying
just say
behind.
something?
I
Can
think
I
they're
say
all broken.
can I
Uh,
say something?
Go
Can I
ahead.
say something to you? Okay. Korea is massive players in our market in all of these maniac stocks. Massive players. Okay, massive. They're bigger than anyone. Okay, as far as they're not big, but they're bigger in a group than anyone right now. There's no one. Dude, listen, I used to basically, like I said, I was the market taker. Now I'm just the defensive player. I used to be like, you know what? Today I see listen, I feel like I see the market today. Okay. I think the market should go lower and lower. I think these stocks are busted. We can name 10 of them on the air. IBM, completely broken. Broken. One of your favorites. Okay.
Yep.
It's now at 209 down from 330. Okay. 330, 209. Okay. We got MU. Okay. Down from 1250 to 850. And it's probably, to be completely frank, on the way to 700 or lower. And you want to know what? At that level, it's still overvalued, Eric. And they're pricing. Listen, I've been doing this a long time. That's why I'm gray. Okay. I've traded Micron in the 80s. Okay. I'm telling you that chip and DRAM prices were the most volatile things in the market ever. And you don't ever hear about, the only thing you've heard about is the same thing that you heard about in silver. Okay. Let's go back to silver in March. Okay. April. Everybody, what was everyone saying, Eric? There's no supply. China's not letting it out of the country. Wait, better. It's going in every data center. It's this, it's that, it's all these things. It was all lies. It's all lies. It's all lies. And the same, okay, let me ask you this. Right now you can buy silver at 56, okay? It probably trades back to 40 where it came from, okay, and blows everyone out of the business. But I'm saying if you believe any of that stuff that was being put all over the internet, and you know it, all over the internet, all over everything, okay? If you believe that, don't you think silver's a layup at $56? You know why it's not a layup? Because everybody's long and stuck. And it can't rally because everybody's long it. It's the same thing that's going to happen in Nvidia, Micron. And I'm not saying it's happening today or tomorrow or whenever, but it's going to happen. These prices, dude, Nvidia is $1 trillion chip company, $1 trillion, one company, along with Hynix, along with Samsung, along with Nvidia, along with IMSL, along with, keep naming them. They're all there. Intel, this one, that one. I know who. Can I ask you this honestly, because I'm freaking out about it? Who are they selling all these chips to? Name 5 companies, 10 companies that are real and big. There aren't any. It's the same companies selling chips to OpenAI with commitments that they're never going to meet because OpenAI isn't doing jack. They're going to be spending the next 2 to 3 years in court defending the fact that they stole all of Apple's trade secrets. Okay? So what are they buying? I'm just saying I don't see it. That's all I'm saying. I don't see it. I am very, very nervous. Okay? Very nervous. And I'm not saying it's today. I'm not saying whatever, but something doesn't feel right.
But it is today, right? I mean,
Today is what? Okay, the Nasdaq's down.
Micron dropped from 1250 to below 8. Where is it? 850, right? That's 400 points. That's
and guess what? It went up 800 or 1,000. Okay, it went up 800. So it hasn't even given back half the move. Okay, when that clown came out, it was $400 a share. So it's got a ways to go.
It was like 720 or something.
No, it was lower. Dude, go look at the earnings. 2 earnings ago, it was 400 and change. High 400s, maybe. Okay? So, whatever. I mean, is Micron a buy here? I would say no. I'm not, listen, for a trade, maybe you get lucky. And then my better question, which I come on the podcast and talk about all day, is it's an $850 name. How much stock could you buy? I mean, come on. You can't buy 5,000. You got a $40 million trade. I mean, come on, dude. It's insane. It's insane. Why that company didn't? I know why they didn't split. They didn't split for one reason. Because they know it's going to come down. And when it comes down to 300, they don't want to have a $20 stock, okay, that no one cares about, okay? So that's why they didn't split 10 for 1. They should have split 10 for 1. They didn't, okay? And the same thing happened in 1999, 2000. They split and the stock went to $1. Oh, look, 9 o'clock program. I mean, come on. You're not even, listen. for the people out there, you're not even trading anything real. All you're trading is an algorithmic nightmare. And you just got to figure out on a defensive basis what's going to move and how it's going to move. But you have to be defensive. You can't offensively make that move. Because if you offensively make that move, you probably are going to lose. Just saying. You know?
So we have trends all over the place, whether it's a relative value trend, but also in trading strategies, stuff that's working and stuff that's not. This is a very algorithmic, rotative market.
So then how could there be trends if they're
Well,
algorithmically
that is the
rotated?
trend. That's what we have on a daily basis.
Yeah,
So
but you're not telling our viewers anything. Okay, so let's just put you in the hole right now. You're in the hole trading. What are you doing today? You have like two choices. You can buy the dip or you can't or you won't. Okay? I'm looking the Nikkei had a horrible night last night, one of its worst of the year, down 3%. Okay? You have the DAX which literally went down, back up, and back down, and it is now breaking lower, down 1.2% today. Every market in the world is down. Your favorite, which I'm telling you is going to blow your head off, is bonds. You want to talk about something trending? That's the biggest trend I see. I want to be short bonds. Bonds are going at 475 and then 5 and then who knows what's going to happen. Look at the European bonds, the Bund breaking out today to 315 on the yield cycle, yearly high, multi-year high. Okay. You got that's the biggest trend.
what's your number one reason for rates continuing higher right now? Number one reason.
Number one reason that Kevin Warsh is going to shrink the balance sheet and not buy any bonds, and he's going to offload a ton of bonds. That's my number one reason. Okay. And I'm clear and concise. He is shrinking the balance sheet. He is yelling at the top of his lungs yesterday saying, guys, the Fed is real. We're not Jerome Powell's Fed who sat here during COVID and everything else and did nothing. Nothing. He did zero. That guy did nothing. Okay. He basically kept everything at zero way too long. Okay. He needed to raise rates over the last 6 months. He didn't raise rates because Trump was blasting his ear out, okay, not to lower rates, which made no sense whatsoever. And he couldn't do that. And now we're stuck in this conundrum of 460 on the yield. Dude, listen, over time, average yield is probably 6.5 on a 10-year, okay, over the last 50 years, okay? But that includes hyperinflation of the 80s. Okay. So yield's probably a tad bit lower than average over the last 50. Okay. But I think it goes, it goes much beyond that, much beyond that. And, you want to talk about, I'm going to call it Trend Thursday. And that's the biggest trend I see. That's by far the biggest trend I see. They've tried multiple times to buy this market, and it's yuck. Um, One market also that I think is trending slowly is the dollar has been strong all year, but this counter trend move in the euro and the British have been decent. So I see a little dollar weakness there potentially. Not a crazy trend. Um, you can't really look at Bitcoin trending. It's trended off the low a little bit, but I wouldn't be buying it at 63. Don't see a clear trend there. And today, looking at the market, it's a scamella. I love using that word. It's just a scam. You don't know whether they're going to buy Nasdaq out of the gate, sell Nasdaq out of the gate. The only thing that I do see that's very clear to me, and you can look at this. I think our subscribers and people watching the podcast should do this every hour on the hour, the algorithm kicks in and just the market, you'll just see it go like this. Or usually it's up every time, but every hour on the hour, they blip up the NASDAQ 40, 50 points. So that's a trend that you can look at. Let's get to a couple of questions.
All right, we got a
I got a question.
Yeah, go
Okay.
ahead.
It says, Larry, keep hearing volume is low. What do you think about it? Well, listen, I think volume is low for a number of different reasons. Okay. I think volume is low because the market is clearly not trending. We talk about it every day. The S&P is 1% from an all-time high, 1% or less. Okay. Somehow, some way, I don't know how. Okay. No other markets are near the high in the world or anywhere. Okay. Nikkei's 7,000 points off the high. All of this stuff, is well off the high, but our market is near or on the high. Um, I don't know why the volumes are light. I think the volumes are light because the stocks that everyone is owning are doing poorly. Okay. And they're just praying that the market holds up. I don't know if you have a thought on why volumes are light
Well,
or
you keep talking about the actual stock prices so high, like you say, how many shares of Micron could you buy, right? So as the stock prices go up, the amount of shares you can buy starts to decrease. Then that I
yeah, but
think
the prices are now going down. So like you could buy more shares of Micron because it's 850 rather than 1250. So I'm not buying that argument per se. I think it's
you're
down
not buying
because
that argument.
no,
Well,
I'm not buying that you could buy more
you just
shares or
said
less shares.
before 850 is still way too high.
Can I explain
How many
something
shares
to
can you
everyone
buy?
watching and to you, which you probably already know, but I'm going to explain this to you. No one's buying Micron stock. No one. They're buying Micron options like ants in a candy store filled with sugar on the floor. Okay? They're buying every option. Thousands, 1050s, 1100s, 1200. There has been more money lost in Micron options. When did you go on your vacation when you were away in the Caribbean? Forgot
May.
when that was.
That was in May.
May. Okay, in May, the volumes were record. They were like silver volumes. Okay, they were record. They're not anymore. They got wrecked. But these guys bought and bought and bought week after week after week after week. So really, volume is light in stocks. The only volume coming in stocks is option hedging. You know, it's amazing. Like the I swear, the freaking Q was crashing when we got on the podcast 12 minutes ago, and then they brought it back $60, and now everybody's fine again. I've never seen a market like this. I've been doing this a long time. I've never seen anything.
Here's a
And
question. Here's a question for you that I like. Is it fruitful to compare an index call and put prices to determine market direction? So basically, if you compare the calls and the puts, and by the way, there's usually the puts should be priced higher, all right, with the same distance away. But
yeah, it
basically,
depends. I mean, I would say in individual equities, it's the opposite. I always see calls way higher than puts. You could probably pull it up in Micron and, off of last night's settlement and see it. Indexes, maybe a little bit, but,
but
you
isn't
know,
like shouldn't puts be always priced a little bit higher than calls
depends on
according
the
to
field.
options
Depends.
theory?
Listen. In a fair, regular market, nothing that we have now, yes, puts would always be higher. You know why, Eric? Because people use puts. They don't do this anymore. I remember, it's funny, I'll tell a quick story. So I remember I worked at Spear Leeds and Kellogg, one of the best firms ever in the world. Okay. Anyone that came out of there was a great trader because if you didn't make money trading, you got fired quickly. So most of the guys that had a career there were very talented traders. Okay. But back then, I was in charge of hedging the risk of the entire firm. Okay. So what would happen is we were the largest specialist on the floor of the New York Stock Exchange. And when the market was selling off back then, we had to buy stock. We had it not like Ken and Jane now who just manipulate the market, don't do anything. We actually had to buy stock. We had to buy stock into a crash. We had to sell stock into an explosion, and we had a hedge. So they would call me up and they're like, listen, market's coming in. We're long. I'm just making up a number, 3 billion in notional. stock. So I would go out and I would look for a hedge in the index to buy puts just in case the market went down 5% the next day. We were hedged, right? No one does that anymore. No one wants to buy puts. No one wants to waste money on puts because you know why, Eric? They never work. So people took the hedge out. No one is hedged to the downside. So the bottom line is back in the day, the reason why index puts were always higher on a very decent skew level, skew meaning put over call, um, the fact was that guys like me, guys like Merrill Lynch, guys like firms that were trading needed these options to hedge out our positions. So that's sort of how this index skew was developed. Okay. Really, they should all be the same price, right? I mean, basically, you have put call parity, you have a reversal in a conversion market that basically you buy the stock, you sell the call, you buy the put. That has to add up to a number. Otherwise, you made free money. Okay. But all of that has been taken out of the game. So when you say puts usually trade higher than calls, yes. Generally, in a real trading market, yes, because people want or need puts more than calls, right? You need to hedge you have to hedge your stock position, right? It's the opposite now. They want calls because they can't buy stocks. How much Nvidia could you buy at $200 a share?
Right. So I think Jim is asking whether it's an important indicator to track the skew, on a day to day basis, uh,
No,
even on
no.
an
I
intraday.
think I think looking at the straddle is way better. That's more of the implied move. Okay. Let's say you have some guy that wants to buy a bunch of puts, then they move the dude. Don't you understand? When I come into the market to make a trade, they just move the market on me. I mean, I'm sure they do it to you too. They just move the market. We can't get anything done. The kid behind me, we can't execute, dude. I'm just telling you. When we want to sell, we can't sell. When we want to buy, we can't buy. Okay, trust me, it's unbelievable. I was trading Micron yesterday. These markets on a stock that's, very, very liquid, they're untradeable. Dude, with 20 minutes to go in the day, $40 out of the money options, which are zero, right? Are trading like $1 because they know like a guy like me sold them and I need to buy them back. So, it's, you know, it's whatever. So anyway, next question.
Here's
Is
one I
today?
like.
Oh, this is a good one. This is for
Okay,
you,
go
dude.
ahead. Go ahead.
This is for you, and I'm waiting. Is this a rug pull?
Well, let's see how much the Nasdaq is down. For it to be a true rug pull,
Eric, what is
it's
a
got to
rug pull?
be
A rug pull you say is a down day. Any down day you say is a rug pull.
no.
But up days aren't a rug pull.
A rug pull to me. Well, you have mini rug pulls, and you have the big ones that you're talking about. The mini ones that we've been seeing are all characterized the same way over the last 6 weeks. You end the day on a low volatility print. Everything looks fine. One of the indices closes at the high, and then the next day everything reverses straight down. And once again, which is another trend that I mentioned,
Oh, come on.
is that the overnight session tends to set the tone for the day in the
Oh no, no, not even close, dude.
very
Yesterday the
close,
market,
very
time
the
out.
data will speak.
Yesterday the market
The
opened
data will
up.
speak.
The Nasdaq opened up and imploded. Okay, I think it's the opposite.
So for
I
me,
think
look, for me,
Eric,
if this is going to be a
Eric,
real mini rug pull today,
there's no rug
the
pull.
Nasdaq's got to be down a little bit more. It's only down 82 basis
But
points.
what's a rug pull?
A rug
I
pull is
don't
more than a
understand.
one standard deviation move
So what? It does that, Eric.
after a day where
Stop.
nobody was looking for. Well, you weren't looking
Why?
for downside.
What are you
You were
talking
looking for
about?
the Nasdaq to
Hold on. Do you want me to
outperform.
show you my position?
I don't
I can
care about
put
your
up. I
position.
can put up here.
You
I'll put it
you
up.
were
Whatever you
telling
want
me
to see.
to
I'm
go long
looking.
the
I was
Nasdaq today.
looking for it, Eric. I was looking for it. You're right. I'm short out of my boo boo. You're right. I was looking for up. You're right. You want when the kid gets back, he'll tell you. Okay. Yeah, I was looking for up. I'm
You
not.
weren't
I
looking for
thought
Nasdaq to
yesterday. Time
outperform
out,
the S&P.
dude. I am trying to talk. Okay. I thought yesterday's action was ridiculous. Okay. I think today's action, the Nasdaq is on yesterday's low, it should blow through that. Okay, and if we get below 700 on the Q, which is only 1%, okay, then a downtrend is intact. But I'm not looking for anything. I've told you this on the air, and I'm telling everyone I'm a hockey goalie. I'm using options to express views that are far out of the money. Okay, I can't tell you what's going to happen overnight, and neither could you. The market was up last night, down last night, up last night. I was shocked with the action in Asia that we were up. The S&P was up and the Nasdaq was up, with Asia down 3%. I mean, come on, dude. We started the podcast. The S&P was down 32. It's down 18. I mean, come on. It's retraced half the move in 15 minutes. Okay. I mean, come on. I know, rug pull. Every down day is a rug pull.
It's not a rug pull yet. It's got to be the down day's got to be Monday.
But how is it a rug pull? Because on the opening I can get out. A rug pull, dude. The definition of a rug pull is when you're standing on a rug and they rip it out from under you and you flip upside down and you can't do anything. You can do whatever you want right now. A rug pull is you can't hit a bid.
It's not a rug pull yet.
Dude, it's never been a rug pull. There hasn't been a rug pull in literal years. Literal years. Now, there's been down days. I'm not saying we haven't had down days. A full rug pull is when I turn to the guy behind me and I literally try to hit something and nothing's there. That's a rug pull. That's where you're dead. Okay? Nobody is dead in this market. You can hedge your position right now easily with big size. Okay? Rug pull to me, and I don't want to talk about rug pull again because every day you say the Nasdaq moves 1% every day. So why is it a rug pull? It does it every day. I can tomorrow's my AMA, but Monday I'll come with stats to show you that the Nasdaq has moved over 1% a day every day for the last 2 months. Okay, so that's not a rug pull. A rug pull, in my terms, is when you're standing on the rug and they pull it out from under you, and I turn to the guy behind me who's now going to sit down, and I say, hit a bid, and there is none. That's a rug pull. There's bids everywhere. There's buyers everywhere. I'm just being honest. There's buyers everywhere. An actual true rug pull, which I've lived through, is when you can't see it. You can't see the market. Opening down 0.5%, that's a rug pull. We moved. Dude, yesterday, the Q intraday had a 1,500-point move up and down, back and forth, all over the place. So I don't see a rug pull. Next question. Do you guys agree? That this is a very tough environment. I'm struggling. I would think such a large intraday moves would be easy, but I'm finding it very hard. Well, I would say this. For me, in my career, intraday moves that are very large are really not the greatest, okay? Unless listen,
Unless you pick the right side.
Well, that's guessing. I told you it's all luck. So now you're agreeing it's all luck. No, what it is, back in the day, it was very easy to scalp, meaning buy them, sell them, buy. And, last couple of days have been good scalping markets. Those days are few and far between, okay? Few and far between, okay? So I would say, hang in there. I would utilize more options. I don't know if you're trading actual stocks or futures, this person, but I would use more options. Like, it gives you more leeway. Like, I'm in options today. It's giving me more leeway. I am a little, it's funny. I'm more scared. It's funny. It's always people want to buy calls and not puts. I'm more scared of downside here. I mean, I don't think, I'm not as scared as I was an hour ago because they saved it again, because they do it every day. I'm telling you, the S&P feels like a utility stock. They want to buy S&Ps no matter what. Okay. And today they'll buy Apple and sell Nvidia and then buy back Nvidia, still buy Apple. This isn't a pure market. But for the person that asked that question, I would find it easier to trade options, do option spreads out of the money. Next question. Please explain using the straddle for market direction. So what I would say is it's what?
By itself, just the straddle alone?
No, I just want to be clear to the person asking the question. We're using the straddle just to get an implied move. We don't have a direction on that. We just want to know which what is going to happen. Like some days, we see in the same environment a $50 straddle. Like where's the straddle today? I saw it was in the
34.
20s. What?
34, and I'll pull up
So it's
the intraday map for today with these implied straddle levels mapped out. These red dotted lines are your 34-point straddle up and down. We just use it for pivot points to get a sense of where to look, um, and how the
give me
option market is priced.
thanks. It's just crazy. All right.
It's
Next
interesting.
question.
We're just sitting at that point of control right now.
No, I mean, I use it a little different. I'm not using it for that. I'm just literally, it's like, like when you get in your car and you turn it on
Well,
and
tell
you
us how
hope
to use it. You got the straddle implied levels right here. You got the chart. How would you approach today? Why don't you tell us?
uh, I am staying away from the market. It's very funny because I call you Johnny Price because
Mm-hmm.
all you do is react to prices to get bullish or bearish. And
Mm-hmm.
I would tell you I'm Johnny Price today. The guy, I don't know why, but
You're generally
technically
Johnny Price.
he has me freaking nervous. I don't even know why. I should be doing nothing, and the guy has me so nervous that it's unbelievable. I literally
So
thought
how
the
do you
market.
come on, dude? How do you use this? How do you use these levels
What are you
on the
talking about?
straddle?
I'm going to tell you. I use it like when you get in your car and you start the engine and you hope the oil light doesn't go on. It's just an oil check for me. It's like an oil light. I'm just using it. I'm not using it for anything. I mean, I'm using it to say, hey, this market participants are pricing in a $30 move today. Okay. And I have a spread trading product, okay, called the S&P Trader, which is my best product over the last 8 years. That's down on the year. They would give a trade a day, every single day, maybe multiple, that I trade maybe once a week right now because I have no confidence in anything. Okay. And I don't feel comfortable, and maybe you do, that the straddle is pricing an implied move of 38 basis points for the day.
No, definitely not today. Definitely not. There are certain days where what I like to do is I like to classify the day as like what is the macro flavor today. When volatility is low, stocks aren't really moving a lot pre-market. Things are a little bit mixed. I could take a risk at the open on selling a little bit out of the money on these levels where when you can still get premium.
Eric, can I
On a
explain
day
it to
like
you?
today,
I
when
just want
markets are
to, we
moving
got to
so
get off
hold
because
up,
we're
hold up.
late. We're late, dude.
Oh,
We're
okay.
8 minutes late.
All right.
Okay.
All
So
right.
we're
All right.
wrapping. Okay. But I
I was
was
just
just,
gonna say on a day like this, what you probably want to do is just wait until prices hit one of these levels. It looks like a day
why are
where
you
one of
so
these.
confident that the market in S&P can't have a 1% move? This is pricing in a 30 basis point move. I'm not trading anything.
What are you talking about? I'm saying that I'm not
Well, what are you going to
confident that
do?
the
Let's say it, I'm going to use your term. It tags your line. Okay. What are you going to do?
at the open. I'm observing. I'm not pressing buttons today at the open.
Why?
This is not. I don't
Why?
think it's the day for
Why?
that. You just said it.
Markets, market
You're.
is timeout. The market is doing exactly what it does every day. The market is on deathbed, okay, during the 8 to 9 to 20 hour. And then as soon as the market opens, everything's fine. It does this every day. I mean, this isn't something that's a clear trend. Okay. We have one more question, which we're not going to answer today, but it's a bond question whether they can buy like TNT or TLT. I like buying puts in TLT. I know you like the bond. I don't know why. But I think that yield goes higher. I think the market's in deep macro trouble, but that doesn't mean like the Q, the Nasdaq future was down 330. I swear to you, I'm short naked some puts below the market. I'm freaking out,
Yeah.
freaking out. I'm so scared. And then 2 minutes later, I'm like, okay, I'm good. I'm good. I don't have to do anything. I'm good.
Yeah, because you're Johnny Price.
Dude, no, I'm not. I'm managing risk
And also,
up and down.
your positions are so close to because there's no volatility and you're hitting credit spreads all day.
I'm not hitting credit
And
spreads. I
so
just
any
told you
ten
I'm not
point
doing it.
move,
Anyway, we gotta go,
any
dude.
ten
I
point
know
move
you
gets
want to
it
keep
off
talking.
kilter.
You're saying I'm hitting spreads that are close to the money.
I'm saying a 10-point move gets you off kilter on the regular.
Dude, because I hedge my position. That's what a trader does. You just
Yeah.
sell a credit spread or whatever and sit there all day, watch it go to max loss, come back. I don't do that. Okay. I'm out in front of my trades always. Okay. And I don't let, like, you'll let a $2 credit spread go against you $8. Okay. And
Really?
no, you will, and
Okay.
pray, and then you make money.
No.
I'm not doing that. I'm trading the whole way up and down. We start going down, I'm selling calls. We start going up, I'm selling puts. So when you say, why am I nervous? I'm nervous because I am outside the market, outside the straddle, but I think a move, listen, I don't know what's going on. I'm just telling you. When the market is down 300 in Nasdaq, everyone's freaking out. When it comes back, everybody is, you know, is whatever. Touchdown just gave me something. Okay, we're gonna leave with this. I don't know what this is. What? How many days?
Yeah, each range above 1%.
Okay, so how many days so far in the year? Total days?
133 at the bottom.
That's the total days of the year.
Trade days, yeah.
Okay, so you call a 1% Nasdaq move a one standard deviation move. I think this is important for people. Okay, there's 133 trading days so far this year. How many days in Nasdaq do you think went above your rug pull? 1% out of 133 days. 20, 10.
I'm seeing the stats that he sent me. This is basically
Okay, so what I'm telling you,
basically a
that's
bell
cheating.
curve. This is a bell curve. There's nothing.
There's no bell curve.
This is a bell curve. The tail end is much lower, and as a the 5 days above 3%. I see the stats.
Dude, there should be no days over 3%. The whole move on the year is 15. That means you're giving a third of the year up in a day. I mean, there's 5 of those. Okay, that's a lot. I know you don't think. Okay, we'll go back to last year. I bet you there isn't even 5 for the whole year. I mean, come on, dude. I mean, you're honestly, for a volatility of 17 or 16 to have 99 days out of 133 days to have a 1% move, your rug pull, that means there's a rug pull every day. So whatever, we'll discuss these more. Okay, we need to go. I hope everybody got something. We're way on the opening. You know, this is lunatic land. I expect the market to fade today. I don't know how they can keep buying them and keep losing, but we'll see. I'm more nervous about the downside than the upside today, and I'll just leave it at that. Peace. Enjoy.